Wrap-up. This is the wrap-up for the live market open for Thursday, February 18th. We're still seeing a generally positive market mood. Markets for now are buying, generally, mostly, the talk about freezing oil production, with more headlines coming from the Iran-Iraq meeting and Libya and other countries after the Russian-Saudi agreement. Higher oil prices mean a higher stock market, a better market mood, less demand for the euro and the yen, but it's not as positive as it was maybe on Friday and on Monday. The Fed meeting minutes were very, very balanced and cautious about financial conditions, but relatively upbeat on the US economy. It didn't move markets too much. Chinese data, which has an impact on all the world, it was mixed. Inflation remains low, but not as terrible as expected. Okay, and we had lots of data also from other places. The UK jobs report came out better than expected. Fall in jobless claims better than expected. Better wages. That sort of helped the pound stabilize after the weak inflation data. We had mixed housing data in the United States, but better inflation figures from the PPI, the second-year figure. Tomorrow we have the CPI. Industrial output was mixed, not as terrible as expected. In Australia, we had a disappointment. Jobs were lost in the land down under. A rise in jobs was expected, but this comes in the context of 3 excellent beats. Okay, today, just after the show, we have a speech by a Bank of England member. The big event for today, 12:30 GMT, ECB meeting minutes. Let's see how united the European Central Bank is regarding action in March. We know they are determined. We know that Draghi is very determined, but we don't know how much support he has. I believe he has more support than markets believe. But let's see about that. Jobless claims at 1:30. Last week they came out better than expected. Let's see if it was a one-off or if things prevail. We also have the US Philly Fed Manufacturing Index. A small improvement, but at negative ground is expected at the same time at 1:30 GMT. And crude oil inventories at 4. It's usually on Wednesday. This time it's on Thursday. It should be, we're expecting a fall in oil inventories, and it could be positive for the mood, but you really never know. Watch out for crude oil and for distillates as well. Okay, let's look at the charts. Euro dollar remained in a frustrating range, very, very narrow, 30 pips today. Levels to watch 110.70 and 112. Pound dollar just under 143, 143.65 and 142.30 strong support. Dollar yen looking a bit weaker, 113.20 and perhaps 114.50, perhaps more resistance, but looking quite choppy over there. Dollar CAD, interesting pair, 136.20 is support. 137.20 is resistance. Canadian dollar improving on oil prices. Aussie dollar sliding on the weak jobs report, but not going too far. I would say the 70 line, of course, is very, very strong support, and 72.20 is resistance. Kiwi dollar, generally better mood in markets, help the Kiwi recover from the weak figures it had, the falling milk, retail sales, inflation expectations. We have a wide range of 65.50 to 67. That sort of defines the wide range of the Kiwi. Before we head off, I see a question here about how do you see the Aussie dollar and euro odd today? Well, Aussie dollar is under a bit of pressure because of the jobs report, but remember, it wasn't that terrible. It all depends for now, for the next few hours, not on Australian figures, of course, because it's not morning time anymore in Australia, but on the general mood in markets, oil prices, talk about stock markets in Europe, stock markets in the US. If everything goes positive, it's positive for the Aussie. If things go negative, it's negative for the Aussie. Okay, battling 71.40, but 70 to 72.20 are the really big lines to watch. And Euro Aussie also reflects market mood. Why? Because the euro is a safe haven, not as strong as the yen, but euro is a safe haven, and Aussie is a risk currency. So we've seen the pair moving higher, finding here resistance at 156, but again hesitating here because it wasn't that terrible, the jobs report. If we have more bad news, we have a potential to break higher to reach 158. But if we have an improvement in the mood, I mean, well, in an okay mood, we could have it slide back down. Maybe we can add a line of support right here at 154.80. Okay, so everything depends now on the mood. In general, the pressure is on against the Australian dollar because of the jobs report, but it's not devastating. Okay. All right, so that's it for today. Thank you very much, everybody, for coming and for the great questions. I always like it when there are questions.